Hello traders, Mark Chapman here. I'm the creator of the trademarked Trap Traders concept. Welcome to today's Trap Traders Trade of the Day analysis. And today's date is the 5th of January 2016. Lots happening today, lots of different opportunities due to what is occurring in China. And as a consequence, the market's been spooked. So we're in a risk-off environment, and any commodity-based currencies which do lots of trade with China are likely to continue to be weak today. I've got a couple of options for you in today's analysis just because they're all happening simultaneously. Starting off with the pound Australian on a 4-hour chart. As always, zoom out so you get a good look at all the different structures and places on a chart where there may be some traders who are trapped. In this particular pair, the trap we're going to look at today is known as a structure failure trap, and it occurred in and around the lows. Price has then rallied strongly, pulled back, and is bouncing off that prior level of resistance, which is also coinciding with the 38.2% Fibonacci level. I think this trade's got plenty of juice to the upside. I believe the value of this pair is higher up, but I'm certainly comfortable trading it up to the underside of that level that had historically been support and resistance at 2.0732. This represents a nice trade, and with the weakness in the Australian dollar set to continue as fears about China reverberate around the world, this day in history, the pound offers a bit of diversification over and above any dollar pairs. The other pairs I want to quickly mention are the New Zealand dollar and the Australian dollar. The New Zealand dollar is obviously going to suffer because of the potential slowdown in China. New Zealand are a big trading partner of China and Australia, so it's all interconnected. So China slows, it's bad news for Australia and it's bad news for New Zealand. With dollar strength from the Fed raising interest rates just before Christmas, I like this trade to the downside, and I think its value is way below where we are now, easily in the 65, 20 to 30 area and even below that. But we may see a reaction off this trap in and around this location here from the 66.35 down to the 65.74 area. So don't be surprised to see price pop up in that area, but I think it will trade lower in the coming weeks and months. It's not a trade yet, but I like it if it pulls back into the 67.58 area, as that level had been historically significant as a level of resistance and then support. It would also coincide with the 38.2% fib, adding weight to the fact that this would be a decent entry. And finally, the Australian dollar, and that's more or less ripe for an entry just now. It's not quite an entry for me yet, but I'm certainly looking at it as it bounces off the underside of that level that had previously been support and resistance at the 0.7206 area. Fundamentally it's sound, and sentiment wise it's sound. Both the New Zealand dollar and the Australian dollar were structure failure traps, and now anybody who had gone long in those pairs are getting squeezed, and that's how I like to enter the market, when I have this edge on my side. If you would like to join me in my trade room today and get analysis on all the pairs I'm trading and all the traps I'm considering, I would love to see you there. Just click the button below to join me for today's live trade room. Have a great day, and I'll see you there.